In today's video, we're looking at the trading strategies used by all Expert4x trading robots. My name is Alex Deploy from Expert4x, and the three strategies we're going to be focusing on today are profit recovery strategies, profit enhancement strategies, and conventional trading. So let's start with the trading philosophy of profit recovery strategies. So what happens with them is that you enter a trade, and when the trade goes negative, instead of using a stop, you recover your gains by adding more trades to your original position, trades that are facing in the same direction, as shown here on this illustration. So enter there. If the price goes down, you add another trade. Price goes down, you add another trade, and so on. The advantage of that is it brings your break-even level down from your entry level. The price doesn't have to go to your entry level to get out of the deal. The break-even point is moved down, 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 and you can get out of the deal with just the smallest retracement. Now, the examples of this type of approach are martingale, grid trading, and flexible profit recovery strategies. Now here's a list of the robots that we supply at Expert4x that use profit recovery strategies, and I'll just go through them. The simple grid series, the grid trend multiplier, the RSI liberator, the wave liberator, the hedge trader, and then the profit retriever. Here is a picture of our webpage, expert4x.com, and here you can see all the EAs listed, and you can just go and click on each of the EAs mentioned for more information. So here are a few examples of the profit retrieval process. So here's an account that is doing pretty well. It's an account that's in our linking service. It's using the RSI liberator, and here you can see the most recent trades taken by this account. Here's a list where it has been successful most of the time, and then suddenly it hit a problem where it was no longer successful, and the price trended in the wrong direction. So what happened is, if you look at my cursor here, that trade went very negative. Then another trade was entered over here, and then another trade was opened over here. Now what then happened is there was a small retracement of the price, and which resulted in the total of these being a positive amount. So they were all closed at the same time for a positive amount. Isn't that fantastic? The price went against the trader. If he was stopped out, he wouldn't have been able to recover the profits. And here's another example then. Same thing, that the first trade went negative. Second trade went nicely positive, and in total they were nicely positive, and there you can see they got closed at the same time. Same thing here. First trade is negative, second trade nicely positive, and they cashed each other out, and so on and so on. So I think you get an idea of using top-ups rather than stops. Here's another view of trading without stops using top-up trades. So this is the grid system, and what the grid system does, it enters a buy and a sell at each level, cashes in the positive trade, and leaves the negative trade to run. And therefore it cashes in a lot, and I'll just go through it. There it's cashing in, cashing in, cashing in, and there it cashed in a number of times at the same level, cashed in, and so on. So it went cashing in all the way down here, and then cashing in all the way up. But at that point there were a lot of open trades over there and open trades over there. But if you add them all together, the cashing in and the open trades, you get a nice positive result, and everything was closed at that point at a $300 profit. So that's another profit recovery type of process. And then it starts from scratch. Then the same thing happens. It cashes in all the way. Every single move in the market is cashed in, but it also leaves in its wake open trades, and there we go. It's cashing in all up up this trend, and then it cashed in all the way down this trend and down the trend that cashed in, and then went up, and then again it reached a point where all these open trades over here, over there, were all cashed in at the same time for a 300 pip profit. So that's another view of a profit recovery process. And here's one where the lucky trader, one of our EAs, uses the martingale principle, and the martingale principle can be seen here in the open trades for this particular EA. So what happens is you start with a lot sizing of 0.3. When you go negative, the lot sizing increases to 0.6, then to 1.2, and then 2.4. But in this particular EA, what also happens is the gap sizing that you use for these increases. If you look at the difference between 98 and 88, that's 10 pips. Then the next gap is 20 pips. The next gap is 40 pips, and the next gap will be 80 pips, and then the next gap will be 160 pips. So it uses martingale for the lot sizing, but also for what we call gap sizing between transactions. But this one's been very successful. As you can see, the close profit is a nice one, based on a $10,000 starting balance. Another variation on profit retrieval. Then we look at the philosophy of profit enhancement strategies. Now, they virtually do the opposite of profit retrieval processes. So they actually use stops for failing trades, but when the trade goes in their favor, they increase the benefits by adding to the trend, adding more trades, and that's why we call it enhancement strategies. And I'm going to show you some examples of that, but essentially what happens in this illustration here, you had an initial entry with a target and a stop. As the price went up, you then top it up with another trade. As it goes up, you top it up with another trade, you top it up with another trade, and by the time it hits the target, it is nicely positive. Also, what happens is that after the first top-up trade, you can move your stop to break even, and therefore the transaction becomes risk-free. And then this break-even trade gets moved up every time a trade is added. So the risk is highly reduced when using this strategy. Let's go and have a look at some examples of this. And firstly, here is a list of the EAs that use this strategy. The Make Money EA, the Double in a Day EA, the RSI Envelope EA, the Make Money Day Trader does it, the Trend Trader does it, and the Moving Average Multiplier. So a lot of EAs use this strategy. So here's an example of the Double in a Day strategy. So there was an entry, very well-timed entry down there. It was a buy, top up there, a top up there, a top up there, and then eventually all four of those transactions hit their targets and resulted in a doubling of the account. If you add up all of these results, you'll get to $1,000, and that was the size of the account used here. The trend was 95 pips. So that's an example of an enhanced transaction because we add to the transaction. And here's another one. Here's a sell transaction, entered over there, topped up, and then exited over there. And in this case, if you add up the totals there, it actually tripled the account. So it took a 1,000 account to 3,000. And that was using the NASDAQ, and you can see the lot sizing that was involved. I think you're getting an idea of what topping up successful trades can do. And here's an example of the Make Money EA. The Make Money EA, here are the open trades for this one and the closed trades. You can see it's done pretty well. This EA is only traded for a few days. Let's see, 1 day, 2, 3, 4, 5, 6, 7, 8 days. It's only traded for 8 trading days. It's made a very nice return already. based on the topping up process. And so it has open trades there. You can see successful open trades. Here are the pips shown on the open trades, and you can see the times that these trades were entered in. So when the make money catches a trend, it will enter a trade, and then 5 minutes, and you can vary this. It can be 15 minutes, or it can be 30 minutes, or it can be an hour or 4 hours. But in this case, 5 minutes later, it says, okay, is the trend still on? I'm going to add another trade. Is this trend 5 minutes later? Is this trend still on? I'm going to add another trade. And there you can see how it's added trades every 5 minutes to join the trend and enhance the results. And here in the closed trades, we can see good examples of this happening. Now, those were successful trades. Successful trade, successful trade, successful trade, successful trade. A negative trade, that trade actually hit the stop, because this system uses a stop. And then if you look at these ones, again, we have a run of 20 minutes, 25 minutes, 30 minutes, 35 minutes, so on, up until about over there. And you can see all of those were nicely positive. And that's why you get these enhanced results. Then the next two were in fact negative. They hit the stops. But then the next group again was nicely positive. 7 o'clock, 5 past, 10 past, 30 minutes past, and 35 minutes past. Sometimes if the signals change, it won't enter trades. So again, the make money uses this same concept. But as I mentioned earlier, there's a whole list of EAs that use this type of concept. Just a quick disclaimer, this video has been made as an educational, entertaining, and informative video for its viewers. It is not personal advice, and what works for some traders might not work for you. Please consult your financial advisor before trading. Trading is very risky, and you can lose all your capital. It is not a get-rich scheme. Past results do not guarantee future results. There is no guarantee of easy success or good results in Forex trading. You cannot achieve the same results in the future by simply copying strategies and settings used by other traders in the past. Okay, so now we're on to the third method, which is what I call the conventional trading strategy. This is the strategy that when you learn to trade, this is what you use. And basically it involves an entry, a target, and a stop. Simple as that. So it's a single trade where you're using a target and a stop. So you're either going to get stopped out, or it's going to hit your target. And you can use all kinds of ways of managing these transactions, like trailing stops, dynamic trailing stops, dynamic targets, and so on. And because they are so simple, they are 100% US compliant. There's no hedging, there's no LIFO or FIFO involved. There's nothing that prevents you from using these strategies on a US account. So let's have a look at the robots that we have that use this strategies. So it's the tradable RSI, the tradable MACD, the ADX trader, the simple RSI trader, the dream machine, and the Forex robot. Now, those robots can in fact trade both ways. If you set them to trade one trade at a time, they are totally US compatible and they trade in a conventional way. If you want to use them in an enhanced way, you can let them open more than one trade at a time, and then they become enhanced. But certainly if you're from the US and you want a robot that's trading one trade at a time and it's 100% US compatible, these are the ones to consider. Again, for more details of these EAs, just have a look at our website and click on the links in the actual website to get more information. The other way of getting more information is simply to go to YouTube and in their search bar, start with Expert4x, and then ask anything else. Like in this case, the person would want more information about the Make Money EA, and you'll then get a very big list of videos covering the, for instance, Make Money EA. The other alternative is to go to our channel on YouTube, and here is our channel which lists all our most recent EAs and most popular ones, and they sorted in various ways. This arrow shows you that you can click on the playlist that is presented. And just a trick with when you visit channels, don't use this search bar to search the channel. There's a unique search facility over here that will only search on this particular channel. A lot of people make a mistake. They search there and then they get all kinds of other videos instead of the videos of this particular channel. But this is most probably an easy way to find things using those playlists. Now, I hope you found this video interesting and that you've learned something about the strategies that all Expert Forex robots. As always, links to anything mentioned in this video will be in the description of the video as well as in the first commentary of the video. I must just repeat that the examples shown here look so fantastic, but you must be aware that Forex trading is extremely dangerous. You can lose a lot of money. There are many risks involved. You need to test your strategies thoroughly. And past results do not guarantee future results. So from me, Alex du Plooy, cheerio. Just a reminder to join our Expert Forex community of over 30,000 Forex traders. It is free, so don't miss out on any new developments. A link is in the description of the video.